Good afternoon, and thank you for joining us. Well, in the end, it was much ado about nothing for the stock market in January. All three of our major market averages finished the month pretty much where they started. That is not to say there was no volatility. All three of the averages hit their low point on January 20th in reaction to the president's statement that the United States needs to control Greenland to ensure international security. The stock market's reaction was swift and negative, much like the reaction to the so-called Liberation Day announcement last April. After some clarifications by the White House, the stock market climbed back to finish the month even. On a more positive note, the financial market's reaction to the president's selection of Kevin Warsh as the next Federal Reserve Chair was positive. Mr. Warsh is a former Fed governor and is viewed as a credible choice to guide our country's monetary policy. For example, Mohamed Al-Arian, the chief advisor to Allianz, said his commitment to reforming and modernizing the Fed bodes well for enhancing policy effectiveness and protecting the institution's political independence. Interestingly, after Mr. Warsh's selection, silver prices plunged 30%, its worst day since 1980. Gold was down 8% on the last trading day of January after setting an all-time high the day before. The tech sector is experiencing some strong headwinds due to fears of an artificial intelligence bubble and valuation worries. Three major companies had a rough month. Microsoft reported fiscal second quarter earnings after the bell last Wednesday, beating Wall Street estimates on both the top and bottom lines. Cloud revenues were above $50 billion for the first time, but the stock fell 12.5% on Thursday, losing more than $400 billion in market value. Apple's stock price was down 4.5% in January, even though it reported fiscal first quarter earnings of $2 billion and revenue up 16% on an annual basis. Apple saw particularly strong results in China, Taiwan, and Hong Kong. Palantir reached an all-time high in November, but has slid 25% over the past 3 months. It was down even though 20 analysts have raised Palantir's earning estimates by 20% since November. It is always difficult to gauge the impact of geopolitics on the stock market. We would not even hazard a guess. Clearly, there are a lot of valid concerns about the Greenland situation, the future of NATO, the war in Ukraine, and will China invade Taiwan? But we do know the stock market adjusts to developments and moves up over time. And we are only at the beginning of the AI revolution. We think the future for AI has an upside that is potentially unlimited. Thank you for joining us. We hope to see you next month.